We are here at Climb 24 with the D-List podcast. I am your host, Esther, and today I am with Natalie Boswell and Karl Oxford. Lloyds are our headline sponsor for Climb 24, which we are so grateful for. But before we get into all of that, can you introduce yourselves?
I am Carl. I'm locally based in the West Yorkshire area. I'm executive director of an organisation called Palm Coast Society. It's a community interest company, not-for-profit, that supports victims of modern-day slavery and trafficking. I'm also director of African and Caribbean Business Ventures, which is a business consultancy looking to support black businesses in West Yorkshire. And very pleased to be a new member of the Black Business Advisory Committee at Lloyds Bank, amongst other things.
Thank you.
And I'm Natalie Boswell, so I'm the Regional Development Director for Lloyds Bank, covering primarily Leeds, but increasingly the North East. So what that actually means is it's my role to be that bridge between Lloyds Bank, our strategy around growth and deploying lending, taking deposits, supporting businesses, and working with the public sector, so the councils, the combined authorities, on things that are important to the region.
Thank you. So, Karl, why were you initially interested in the role at Lloyds?
The program that Lloyds has got on a national basis to support black businesses is very important. I find it pragmatic and really relevant to the needs out there among black businesses. And it was very, as a Yorkshire-based person, I'm very keen that anything that's got the potential to help my local area to be involved in. So, it was great that working with Natalie and Lloyds, we are able to bring, a presence of that program nationally into West Yorkshire, and myself included, being involved.
Thank you. And just for context around your role, I'm correct by saying that you're not actually employed by Lloyds. They're all external bodies who come in.
Yeah, so we're like a non-executive committee. So we're not salaried as such. We provide an advisory role. And we work alongside Natalie and the senior management team, who are, on a day-to-day basis, in charge of delivering the core products of Lloyds. But and this is what's really exciting, where there's a commitment that they're going to try and do that in a more equitable way, and in a way that tailors, those services that Lloyds can provide to the needs of the, some of the underserved business community, and in this regard, black businesses.
Yeah, and why, not to sound like this is such an obvious answer, but why do you think things like this is so important?
They're important because we have historical levels of inequality, and that's inequality in employment. So we have various economic versions of inequality in employment, in training, in skills, and in this regard, in enterprise. And some of these, unless we address them, these can have long-lasting effects on a person's quality of life and life chances. And what we have found over the years is that there's been a perpetuation over the decades since we've been monitoring a lot of the, disparities, economic disparities, i.e., for example, black businesses over the years have been identified as some of the black entrepreneurs are least likely to start in business, but yet the most likely to fail. They don't access financial support from banks and other lending institutions, equivalent to other ethnic groups. They tend to be saturated in certain lifestyle industries with very minimal opportunities to grow and scale and reach into the mainstream marketplace. And the unfortunate thing for that is that it keeps the potential of the black business community constrained, but it also, it doesn't, maximize the potential for the black business sector to contribute to the wider economy, because, it has unique strengths and contributions that it can be made to the wider business economy and And unless we address some of those issues, then, we're limiting our success as a whole community.
If I could just add to that a little bit as well. So the Black Business Advisory Committee, it was originally established following the George Floyd murder and the Black Lives Matter movement, a lot of M's. And what came out of that was we really looked at our own organisation. So as a group, we employ, I'm not sure on the actual statistic, about 60,000 people in the UK. So looked internally in terms of the people who work for us. Are we truly an anti-racist employer organisation? The answer to that is obviously no. So what work could we do on the back of that? A lot of our employees were really keen to work to help with that. We have moved forward, but there's obviously still a lot of work to do. But we report a lot more around gender pay gap, ethnicity pay gap, and there's absolutely loads of work that we're doing, and that's all available on the Lloyds Bank website if anybody is interested. But don't flock there all at once. But we have to be reflective of the communities in which we serve, and we can be a really inclusive, diverse employer, but that doesn't matter if the products and the marketing and the engagement with the customers, be that retail or businesses, that we're engaging with isn't truly representative. So the Black Business Advisory Committee was put together about 4 years ago, maybe slightly less, to hold us to account as an organisation in terms of adverts that we were putting out, products that we were launching. It could be anything, or things that we haven't even thought of. To really say, as a group of 12 people, they owe us nothing. We pay them for their time, but they can be as brutally honest with us as they want to, where some of our employees might feel that they can't. And that's really why they originally created. So it's chaired by Claudine Reid, who's fantastic, and all of the members are brilliant. And why I was really keen for Karl to join was he did some, again, paid consultancy work for us last year. And I was really keen that we formalise that into a formal, proper kind of contractor advisory role because of the work that we've done together. But also to have that West Yorkshire representation on a national committee, because a lot of the members are from London, from Birmingham, because naturally that's areas that we've engaged with before. But my role is to bring the best of what Lloyds has got to offer to businesses into the North East West Yorkshire region. And I think having Karl on that committee just brings a slightly different feel, a slightly different regional focus. And how long have you been on the committee now? Maybe 3 months?
About 3 months.
About 3 months. So in that time, we've had Claudine here twice. We've got her coming up. She's committed. The whole committee are coming up to Leeds on the 5th in November, which is the first time ever. We had Nathan here yesterday as well. He's another member. So Nathaniel, sorry.
Sorry.
We've met lots of people yesterday.
The climb is full on.
Exactly.
Sure.
So we're seeing people come up, and I'm not saying that businesses in this region have wildly different needs to businesses in the south, but there are regional nuances. And I think unless the committee have Karl's voice or a regional voice on there, and they're coming up and they're seeing it for themselves, and they've got somebody saying, by the way, come to Leeds because it's great, and there's lots of businesses here that need support, I think there's something missing, but I'm happy we've plugged that gap now.
Yes, well, staying on that topic then, so what are both of your thoughts around building a stronger and more sustainable North regional economy?
Well, it's essential, but it can't be done in isolation. It has to be done in collaboration with key decision-maker organisations, key stakeholder groups, such as Lloyds and such as Natalie. And I think if you just, listen to that last response that Natalie just gave there, you can see why I believe that there is a realistic chance of us doing something meaningful going forward. Because if there wasn't a chance, I wouldn't be on that committee. I can drink coffee and earn money anywhere I want, but I have confidence in what that committee is trying to do, and evidence of that would be the comment that Natalie just made there, very sincerely, about not only the commitment to respond to some of the inequalities as it relates to maybe the George Floyd era, but to be honest, as Natalie and I have spoken before, Lloyds have been committed to this stuff years before George Floyd, but not in this way. So Lloyds Bank have been committed to providing equal access and equity for ethnic minority businesses for decades now. Lloyds have been pioneering on this stuff. But what Lloyds have been doing previously was commissioning reports and research into what the issues and needs are. The game changer here now, within the program of support that Lloyds do, and again it's on the website, but in particular evidenced in something called the Black British in Business and Proud report, is Lloyds is laying out a program of interventions as it relates to pre-start, new start businesses, micro and SME businesses, but right through to some of the larger black businesses. And it's important because when we talk about these things, we tend to stereotype the black businesses and black individuals as poor souls who need a lot of help, but there are some great successes there as well that we need, and Lloyds are very keen to help us to illustrate. But the key,
I think as well, some of those amazing high growth, big employer black businesses do not shout about themselves.
They don't.
And that's something we
there you go, and it's quite strange. These are very successful individuals who understand the kind of key ingredients of creating a successful businesses, but they are so kind of unassuming, some of them, and keep their their hide behind the bushel.
There's a business based in North Leeds, which I won't name because I don't think you'd appreciate the shout out, but they've banked with Lloyds for a long time. They employ over 1,000 people in Leeds, and they're a significant size business, started by two black guys who moved over in their early 20s, and we had no idea that they banked with us. We had no idea they were this big business until we started the Black Entrepreneurs Programme, and we really looked at who are our client base, because there's a gap in data collection. So when you start a company and you go on Companies House, and this is presuming you even register your company, you might be a sole trader, so you might just be operating as an individual, so you've not even really declared, short of your tax return, that you're even doing any kind of business. But if you go on Companies House, register your company, you tell them your name, your gender, your address, your lots of different bits of information, but they don't ask you what ethnicity you are. So there's a data gap there in terms of we don't actually know how many businesses there are in the UK, and Lloyds collects that data. What's the country on your passport, what's your nationality, where do you live at the moment. We collect that for a regulatory purposes, so what's called Know Your Customer. We have to identify who the people are that bank with us and all of that really fun stuff. But that's a protected characteristic, so we then can't use that data to put our customers into certain criteria, if you know what I mean. So we then can't sort of reach out and say, we see you growing, how can we help you? It's more if we come across those businesses and go, oh, well, you're really interesting, and you bank with Lloyds, and then we have to kind of make that connection. So there is a bit of work happening to see if there's more that we can do about that, but it's a regulatory, it's kind of a legal issue as opposed to kind of a bank thing. I wish we could solve it, but I don't think we can at the moment. Sorry, Carl.
No, it's fine. I just wanted to make sure I didn't forget to say that the key comment that Natalie made, two comments ago, was when she said that Lloyds wants to understand better, the needs and the access and even the kind of diversity and progression routes in its organisations, but there are employees who are black in the organisation who may be, hesitant to speak more freely.
Yes.
And that demonstrates, because every organisation has a culture and every sector has a culture. And this kind of conversation we're having we shouldn't undervalue, the significance of it, because it's not commonplace in some of the cultures of organisations or sectors, the public sector in particular, right? And then amongst the private sector peers that Lloyds has, to have a very forthright commitment like that, where the more senior management in an organisation, I was very pleased to go to the headquarters of Lloyds for my first committee meeting a few months ago, and even down there in London, they're very receptive for critical advice and guidance in a constructive manner. And very sincere about trying to respond to that. And we call that co-design. We call that co-design, where we try and identify what an issue might be or an opportunity might be, and work together mutually and equitably. And that's, and it's very good. And the bonus is that Natalie and I get on very well. So we work, we get on very well, and myself and our colleagues, we get on very well, and it matters.
Yeah, absolutely.
It
It's
matters.
always
I learned so much as well from and I think this is part of the thing as well. And in the north, and Nat is right. There's, by and large, a lot of things are very common, and there's a saying that goes, "There's nothing new under the sun." And so a lot of the issues that affect black businesses up here, and the challenges for us to kind of bring equality for an opportunity for black business up here, are no different to those other regions. But there are those nuances. There are those nuances, and one of those would be that the black business community in West Yorkshire is significantly smaller than it is obviously in London. And then the regions outside of London, in different ways, economies of scale, would be, again, there'll be a variation of size. And like events like Climb today and yesterday demonstrates what could be achieved when you don't only mix, you kind of galvanize relationships between black businesses, but then wider business peers and organizations, because there's that notion of iron sharpens iron, and we can learn from each other. We can benefit from each other. You two young people here today, there's a lot I'm sure I can learn from you guys, but we need to be in those spaces more. And this work and program that Lloyds are doing is creating opportunities for those spaces to develop.
I think it shows it's starting to work as well, because when we're at events like Climb, especially the D-List Black Founder Workshop yesterday, and probably people listening to this as well, come up to us and go, "It's great that you're here, but that's not my experience with Lloyds." And the fact that people are telling us that is great, because that means we can do something about it. And if there's people sat in that room thinking, "I don't really care because that's not my experience," and they don't come and tell us, I really like that people are telling us, because it means that they feel comfortable. So the first thing, and I'm not saying we've achieved this by any stretch, but it shows that we're starting to turn the dial a little bit, is just that systemic lack of trust in big organisations, especially banks. Somebody came up to us yesterday and said, "Let me tell you about the issues I've been having with Lloyds." And the fact that somebody feels that they can trust us enough to share that, I think that shows that we're in the right places, doing the right things. And, we've taken that away, and we'll do our absolute best to do something. But the fact that people are even raising it just shows that we're moving in the right direction.
And I think it's a key point, because one of the barriers, towards a thriving and successful black business community has been the issue of trust over the years. And as it relates to other things, I'm sure, even in our own lived experiences, there's always that issue of trust. But underneath that heading of trust comes the notion of perceptions. And I think that's what you're relating to. There's a perception that the bank, Lloyds Bank, is not interested. There's a perception that, your application, for, banking support, lending, or whatever it might be, is not going to be successful because the individual you're talking to is not interested, or, worse, maybe harbors, forms of discrimination against you. And, And when we can address perceptions through face-to-face interactions, and and where we can evidence like a successful outcomes, it means a lot because good news can go a long way as much as bad news can go a long way. So addressing the issue of perceptions through direct contact and interaction and pragmatic and practical working, and I can't say that enough, because every Tom, Dick, Harry, Shirley, Valerie, they'll all the equal opportunities and policies and commitments to narratives around fairness. We've cut down half of the Amazon, creating all that kind of those narratives, but we're not very practical at delivering on
Yes.
that, and so an actual tangible and evidence-based program of action is essential, and that's where the two come together.
Yeah.
And but that has to be owned at the highest level of the organization,
Yeah.
so it's not seen as a one-off or tokenistic, and it's got to be
Absolutely, yeah.
sustainable.
Yeah.
If I can just give a bit of context as well, because I think we're sounding very kind of philanthropic and very like philosophical about the things we're talking about, aren't we? So I guess why does Lloyds care about this? And why are we sponsoring things, and why are we interested? So Lloyds is the largest digital bank in the UK. So we have a really high mortgage market share across Lloyds, Halifax, Bank of Scotland. So lots of people have their mortgages, their day-to-day banking with us. 1 in 5 businesses bank with us, and we are a UK focused bank. So over 99% of our income comes from the UK. We don't have big multinational operations that make money for us. So when the UK economy is doing well, Lloyds Bank is doing well, and we're a private organisation, and we're not apologetic for that. However, like Karl said, when we look at underrepresented sectors, entrepreneurs throughout the UK, there's all sorts of stats I could spout off. But if we're looking at female entrepreneurs, black entrepreneurs, disabled entrepreneurs, all of these people who either have an amazing idea and never do anything with it because they just don't know where to start, or they do something with it but they never get it above just them doing it because
Yes.
they don't know how to grow, or they do grow, they get to 5 people and it becomes an amazing lifestyle business, but they never have the confidence or the access to finance or mentorship to really know how to grow and scale and build that confidence. That's where we see the opportunity around growing the UK economy, because if we could bridge some of those businesses into becoming those next big employers in the UK, we want job creation, we want the UK to become more productive. I don't know where we rank in the tables at the moment, but it won't be very good. So there's lots of work happening around making the UK more productive, be it through manufacturing or lots of different organisations that we work with through like the Manufacturing Technology Centre. But if we can start to bridge some of that, and this, even if we change that by 1%, so if 1% of those businesses get started, employ more people and grow, that's going to have a significant impact on the UK economy. Then there's more businesses that Lloyds can support. If it's suitable, we can lend money to, they can bank with us, and that's how we want to grow. So we're a bank in growth mode. We want more businesses to bank with us. We want to lend more money. We want to grow our balance sheet, especially in the north of England, which is my role. And I think your question earlier around northern ecosystems, I was listening to a panel yesterday on ecosystems at Climb, and I'm just sort of reflecting on it. And I think ecosystems operate, in their broadest sense, kind of in silos, and they get on with what they do really, really well. And I mean this in like a, the through to like an organism perspective. So if you think about like what am I trying to say, like a biological organism, right? So things operate in their silos, they just get on with it. And if there's outside intervention, that can either be good or bad. And I think geographical ecosystems work in the same way. Be that black entrepreneurs in the black community, be that women entrepreneurs that we're seeing, people just find really good people and they come together and they make amazing things happen. But if there can be a catalyst that comes around that to go, well, actually, you can grow quicker if you talk to this person, or you can, if you thought about joining Lloyd's supply chain because what you're providing actually would work really well for us. If we can find those people and catalyse their growth, that's where it starts to get quite interesting.
And I mean, again, you can clearly see that Lloyd's are not doing this just to be do-gooders or be seen to be kind of giving that helping hand to those poor.
And one of the messages that came out of the D-List workshop yesterday from Zena was, don't be apologetic about making money.
100%.
You charge for your time. Don't give anything away for free. That's what came across the entrepreneurs.
Yeah. And I think, importantly, how that's communicated in a very easy to understand way.
Yes.
Yeah. And it's a very grown-up, mature way for us to look at diversity, because it explains the benefits of diversity in black and white, in hard and cold way, numbers, and that's what's exciting. It really is, because it's a different take to the kind of boring fruit pastel thing. If we think we've got enough of them and some of them around the table, and and we all say, well, if you eat a bit of my food or drink, wear my clothes, and and share each other's cultures, that's the utopia. No, it's not. We've got to get grown up about how we're going to get that change, and how that change as a merits on both sides and benefits on both sides. And that's why I like the Lloyd's agenda. It kind of brings a more sophisticated but easy to access involvement in that level of thinking and sophistication.
Thank you. And on that, Carl, could I just ask about your own personal experiences around ED&I?
Yeah, I'll try not to be controversial, because it's. But yeah, as I was explaining earlier, when we have these stats, and I think I've evolved and grown out of the fact that I need to come on programs like this and come with the latest stat of a situation.
Yeah.
But we do know that it's not hard to find that data. Every 10 years. The government, the ONS, we have a national census that keeps giving us data of these our demographics, our population, and our sub communities in that population. And what we find is that historically, since that data has been captured, it's 1991, 2001, so the last one was 2021. And if you analyse that data, and even though some of it's kind of designed to be a bit more ambiguous than it should be,
Right.
But when you analyse that raw data, you find that some of those protected characteristic groups, including people with disabilities, women, ethnic minority groups, and then within the ethnic minority segment, there are different varieties of disadvantage, and we have an unequal state of our community in this country. And some communities are less likely or more likely to be affected in forms of deprivation, including even Natalie mentioned mortgages, and some of the Black, African and Caribbean, and more Caribbean business community are more likely to rent than purchase housing.
Right.
And these things then have an impact elsewhere when you're trying to borrow capital and. Mm-hmm. And invest in these kind of opportunities such as going into business. And for me personally, my view is we have to be seen to try, not just to talk about and make sound bites about an equal and fair society, we have to be seen to practically be doing something about it. And the point about not wanting to be controversial is because I know we're in a, because my personal view, and I'm not being disrespectful or on kind of not looking at the significance of what happened in South Africa, but it's a mild form of apartheid. If you have systematic year on year forms of inequality and you are not seen to be trying to do something about it, it's as if you accept that as a normal situation,
Yes.
and it's not right. And so my personal view is on EDI, and there's also a difference between equality and diversity. Diversity is where we have the luxury of bringing different aspects into the same arena and celebrating that. But equality is about the nuts and bolts of human fairness
Yes.
and equity in society and in the world that we live. So that is my take on it. I tend to put my limited energy into activities that give me a sense of making a meaning. And the unfortunate thing is as well, which is a little bit not so much political, but we over the last just under 1.5 decades, we were making as a country and in the form of some of the equality as it relates to ethnic minority groups since the Windrush 1948 sailing from Jamaica to the UK, and the second wave, the migration that came from that time, including from South Asia, the Caribbean, and then Africa. The I was going to say the diversity, the equality that we so we have evoluted as a country together.
Okay.
I wish Lloyds Bank was doing then what it's doing now, right? As a country, in terms of race relations, a lot of the legislation that's evolved into the Equality Act, and the Equality and Human Rights Commission and their program of support for policy towards those protected groups. All of that has evolved since the 1960s. And we were making progress because we had, which is very important. So if we look at Lloyds and what Lloyds is doing as an organisation, the country and the local authorities that deliver the government agenda in the country, we had created structural changes to create equality. And those structural changes were termed under something called a public service agreement and neighbourhood renewal targets. And we had all of those, which local authorities and key partners that existed back, 20 years ago and just a bit less, they were accountable to government to say, right, we have created more women entrepreneurs. Mm-hmm. We have reduced the level of failure in those sectors, etc., employment training, etc. And that way everyone could see the progress we were making. Now that structural framework has gone. Completely gone. It went in 2010. Right? And so since then, we have, tinkered around how we bring about equality. As I say, I'm making a distinction between equality and diversity.
Yes.
We've tinkered around that as a country. There hasn't been no means to measure our progress anymore. In fact, some would say we've gone backwards. And the good thing about, the agenda now, well, in that space, and, on private organisations like Lloyds and others, they've kind of filled the space that the public service sector used to have in terms of engaging and supporting communities. So we do need to have that legislative framework back. And we so Natalie and I have been working with a combined authority, which is in West Yorkshire, 5 local authorities come together: Leeds, Bradford, Wakefield, Calderdale and Kirklees. And so, we've worked with them to, even though there's not a mandate formally for them to bring equality, there's an expectation that would be the case. And so that's my view on the world.
Thank you. So if we reel it in a little bit to the past 48 hours, give or take, Climb 24, as I mentioned in the beginning, Lloyds is the headline sponsor for the D-List. Why did you choose to sponsor the D-List?
Okay then. So why did we choose to sponsor it? I think, so Mel, who runs the D-List, is amazing, and you just do what she asks you to do. No, I think, so Climb started last year, and I think the organisers have been really proactive in making the festival really inclusive, and I'm using inclusive over other words, and representative of the entrepreneurs in the region and nationally, because we want to bring in people from outside of Leeds as well for Climb. And what Mel did was when she came to us and said, I'm going to bring 100 black founders together in a place where they wouldn't normally engage, where we know one of the barriers is access to finance and investment. And we're going to talk about, what the barriers are, and then we're going to bring a load of funders together in a room with the entrepreneurs, and then there's the opportunity for them to come and talk to you, for you to go and talk to them, to ask lots of questions. I think we're kind of past the point now, like Carl said, of talking about the problem. And we've done enough. Lloyds we've done 2 iterations of our Black British in Business and Proud report, amongst various other types of research that have been done alongside it as well. We know what the problems are. We now need to move it forward and actually make a difference. I think that's what was really interesting around. We're actually going to bring the funders in, and you're going to have the opportunity to engage with them and ask lots of questions. And the session overran in terms of the actual content that was being delivered, because people asked loads of questions, which is what you want. So we were able to go into quite a lot of depth about the difference between funders, about the difference between funding. So what's the difference between equity and debt? Because I think sometimes the word funding, the word finance, investment is used interchangeably, and I don't think that's overly helpful when people don't know where to go. So I talked to a business yesterday who was looking at taking on angel investment, so equity, so you are selling part of your business so that they could buy a property. So that just doesn't quite work. Maybe it works for them, but in theory it shouldn't work. So in equity, so the easiest way to explain equity is it's like Dragon's Den. So, and I'm sure not all equity providers are like dragons, but that's the most way that people can understand. So you sell a proportion of your business, so a portion of your shareholding, your equity, to either an investor or a private equity company, and in return they give you an agreed amount of money. The valuation of your business will depend on how much you get. So it might be, my business is valued at £1 million and I want 10%, therefore it's £100,000. There's a lot of negotiation around why is it valued at £1 million? I think it should be 500,000. Then it turns into a bit of a negotiation. And I think I've been looking at some stats this morning, so it's fresh in my mind, but we see the gap between female founded businesses, both, a penny in the pound goes to female founded businesses in terms of equity investment, and that's in volume, so the number of female founded businesses that are invested in, but also the value. So I don't know what the root cause of that is. I don't know what the cause and effect is, but what could happen could be that when an equity firm or an investor pushes back and says, I don't think your business is worth £1 million, I think it's worth £500,000, and I'll give you 50,000 for your 10%. Maybe that's it more easily accepted, rather than pushing back and saying, no, I don't know if I'm allowed to swear or not, but screw you, my business is worth £1 million. So that's equity, and generally what you get in return is you don't have fixed repayments, so you don't have to meet, on the first of the month, you don't have to pay a proportion of it back. But there's another person who has, or another organisation who has a vested interest and a say in your business. So the question going into it is, how do you run the businesses in your portfolio? How involved do you want to be? How much of an opinion are you going to have? How much information do I need to give you, and how often? Those are all really good questions to understand from an equity perspective. And angel investors fall into that. So that's wealthy individuals who invest in businesses, and that's all equity. And then on the debt side, so that's who provides. So banks provide debt. The British Business Bank has organisations that provide debt on their behalf. So in West Yorkshire, that's the Business Enterprise Fund and Mercia. And Lloyds has recently invested as well in two what are called CDFI, so they're community financial institutions, and they lend to businesses that don't meet sort of traditional bank appetite, and that's Finance for Enterprise and Business Enterprise Fund as well. So, and we had these organisations in the room yesterday. So, debt is where the easiest way to explain it is it's a mortgage, it's an overdraft, it's all of the things that people will know about from their personal banking. It's just in a business context.
Right.
So if you're currently renting your building and you want to buy it, what you need to be happy with is that you can meet these fixed repayments on a monthly basis. So the bank will give you some money plus an interest rate. So that's where we make our money. And then you pay it back over a pre-agreed period of time. And that's basically how it works. We don't want any involvement in your business. We don't want a place on the board. There is no involvement. As long as you're paying us back in those monthly instalments as agreed, we completely leave you to it. And that's the benefit of kind of debt versus equity. But if you're sitting there thinking, I want to grow, it might be quite useful for me to have somebody with their expertise. So, in Dragon's Den, you hear them say, well, I want Theo because he's got retail experience. I don't know if I've got my dragons right, but that's kind of the benefit that you get from the equity side that you don't get from debt. And then kind of within debt, you've got two realms. So you've got, I'm buying this thing and I want something to fund it. So that might be a vehicle, it might be a property. So you've got security that you can give to the bank in order for them to lend to you. So it might be a commercial mortgage, it might be a car loan, something like that. The other side is working capital. So I need to buy these things before somebody pays me for them. And you've got this gap between buying something and selling it. So that's your working capital need. And for that, you've got overdrafts, invoice finance, credit cards, broadly. And they don't have this fixed monthly repayment. Credit cards maybe, but overdrafts and invoice finance, you don't have to pay you back at a certain point. It's meant to be cyclical. So you will go into your overdraft or invoice finance facility when you buy something, and then it trundles along a little bit, you pay some salaries, and then someone pays you, and then you go back out of your overdraft into black. So you're constantly going like a wave, kind of up and down, up and down. And that's the way an overdraft or a working capital facility is meant to be used. They're generally agreed for 12 months at a time, and we'll ask for your financial information, so your profit and loss, your balance sheet, potentially some cash flow forecast, depending on what's being asked for. But once the facility's in place, as long as it all runs as expected, you'll be left alone. So that's the conversation we had yesterday about the difference between the two, when somebody might want debt, when somebody might want equity, or a bit of a mixture of both. I think having the funders in the room was really good because we could give lots of different opinions. One of the equity providers one of the people in the audience asked one of the equity providers, what happens at the end? How long do you want to invest for? And then what happens? One day do you just go, I'm done now, can I have my money back? In which case, what happens then? That's not what happens. So you pre-agree a period of time. It might be 1, 3, 5, 10 years. And then, that's kind of reviewed if it needs to be. And they referenced in 5 years' time when you sell your business, and you could kind of see people in the audience go, I don't know if I'd sell my business. But as a debt provider, because we were in the room, we could say, well, actually, at that point, equity will have been right for you at the time because maybe you didn't have a track record where you could show that you could afford debt. So that's the other thing with a debt product. So banks, debt providers, we lend responsibly. We can't put a business into a situation where they can't afford to pay us back. So there needs to be a track record that shows you can afford this loan or this overdraft or whatever it is. So you've got a period of profitability. So maybe equity was right for the business at that time, but as the equity has allowed you to grow, take on more customers, expand into different markets, create new products, you've grown and you've become profitable, then maybe you can afford some debt. So then potentially you could take on a debt product to buy out your equity partner. So because we were all in the room together, we were kind of able to tie this together and have the same conversation, but from different angles, which was really good.
Seems like a lot of value within the room, both for yourselves, the audience, and for the D-list as well. That's what really shines through that conversation.
Yeah, definitely.
What shines for me is that conversation took place yesterday, and ended yesterday. However, the opportunity to kind of progress that conversation because that was very interesting, wasn't it, to listen to what Natalie just said then, into one or two masterclasses for some of our black businesses.
Right.
Because as much as it might be, nowadays, and it's really good that as our generations have evolved, the black business population has evolved in the UK. 10 years ago, 20 years ago, people weren't, they were frightened about debt. They were frightened about asking banks for money.
Absolutely.
Tradition, and I'm not stereotyping, because there are those successful ones who Natalie mentioned earlier, people that employ 1,000 people, turn over how many millions. Obviously, they know the benefits of utilizing some of those lending products. But the discipline of accessing finance, and more importantly, managing your business, because you can't access that finance on those opportunities for financial products properly unless your business is being managed in a very disciplined way. And
you don't know what you don't know, right? And if your parents or your grandparents or your cousins, your aunties, if people don't talk about money,
that's the point.
You don't know.
Yeah.
So what I'd recommend is if you have a look at the Lloyds Bank Black Business Hub. So if you just Google Lloyds Bank Black Businesses or go to lloydsbank.com/black businesses, there's loads of information on there. Carlia, the Black Entrepreneurs Programme Managers, built a bit of an overview in terms of this is what banks look for in terms of assessing applications. And it can be anything from your personal credit score, so things like making sure you're on the electoral register, things that you don't even know will disadvantage you. Super, basic things like making sure the money for your business is all going in and out of the same account, and that's not your personal account. So you have an actual business account. So when it comes to applying for finance, you can evidence to a bank or a debt provider, I am making a profit or there is surplus available so that I can afford debt, because you can see through my bank statements or through the accounts that my accountant produces for me that there is more money coming in than going out. And if that money is going into, partly into a personal account or partly into a different account, that's quite difficult for a bank to put together. So it's simple things like that people can be doing, and some kind of top tips and things that can help people before as they get going, that will help them in the future.
Yeah, I think that's really good advice, especially like you said, for people who are just getting their foot off the ground.
Yeah.
Is there any other advice that you would give for people who are just starting out?
We within the Lloyds, so when people go on the website and look for Carly Ismail, they'll also see that we have a program of support called Founder Vine, which is for new start businesses, small business enterprises, and so many useful tips and support within that. But there's also, and this is very key, there's also how my company did some research for the Combined Authority 2 years ago on the engagement levels of black businesses in West Yorkshire, and we found that a key, a very important element to getting those black businesses to respond more favourably and an understanding of the kind of wider support out there was through trusted voices.
Yes.
So in our communities, your Uncle Jack or your church, your pastor, or a black business that's been in the community, and and's got a kind of understanding about the marketplace and the environment. They tend to be the go-to people initially, and the ones that you trust to say no. Look at taking out that product with Lloyds, or because a lot of our business tend to be cash-based businesses as well.
Right.
Yeah, cash-based, and if we do want lending in the Caribbean community, we've had these partner schemes, part credit union type facilities that people use as opposed to mainstream commercial products, and people need encouragement and reassurance that it can be done differently. And the good thing is, as our communities have evolved, and a lot of younger people, seem to kind of be more able to kind of reach out into those mainstream areas more than the grandparents and parents did.
Yeah.
And so it's changing for the good. But there's still a segment of people that still need that encouragement and community support to take on some of those mainstream opportunities.
Yeah, Founder Vine's a great shout. There's lots of really good mentoring schemes out there as well. I think just for businesses in general, not just black businesses, I think engaging with a mentor, a coach, somebody that's been there. I wouldn't even say somebody that's got a similar business or that's in a similar industry to you. I think I've seen manufacturing businesses learn loads from aerospace companies, and it's amazing. I sat at dinner a couple of years ago in between somebody who makes ice cream and somebody who makes aeroplane parts, and like the synergies between their businesses was just amazing, but you would never have put them together. So I think don't discount people just because they're not doing what you're doing. You'll learn a lot from somebody who's just already been through business, and they don't necessarily need to be an entrepreneur like you. They could be an advisor. And we talked a little bit about this yesterday around people going to their accountants, and there's some amazing accountants out there, but I think just doing a bit of research, and we've heard this in the female entrepreneur space as well, that you're so busy and when you start a business and you don't know where to go, you kind of set all these hairs running and just see what comes back, and then all of a sudden they all come back at once, and then you're really busy. So I think my advice to anyone starting out is really just keep hold of your North Star. So why are you doing what you're doing? What's going to make you money? And really prioritising that. Something that came out of yesterday, Zena said, you charge for your time, you charge for your product, you don't give discounts because what you're doing is really valuable. And if people want it, they'll pay for it. And there's a point around, pricing your product correctly, or pricing your service correctly, and, not pricing you out of the market to begin with. But I think that's really important. And if you don't spend all of your time going around saying yes to everything because you feel like you should, and you don't want to miss an opportunity, because what if you don't go to this thing and there's a person there that would have made a difference to you? But burning yourself out and trying to do everything, regardless of whether it's going to make a difference to your business or not, isn't really going to do you any favours in the long term. So when you're given an opportunity, is it going to drive your business forward? Is it going to give you personal growth? And are you going to enjoy it? Yeah. And if the answer to those three things is no, then you're probably not going to do it.
Yeah, no, absolutely.
And it doesn't need to be all of them. It can be one of them. But I think just being really clear around where you're going, why you want to go there, and then kind of what the steps are to get there, and being a little bit ruthless with it.
Yeah. And I think also it's acknowledging what but it's also acknowledging what you're not good at.
Oh, of course.
And therefore it's very important to try and have a team around you where you've got complementary skills and expertise. And even with the Lloyds Bank thing, I think, to be honest, that's all Lloyds are doing, is building a team to try and achieve the endeavours that Lloyds is trying to do, and that works for each team member. But in a business, you might be good on the sales, you might be good on the operations, you might be good on the financial management, but you're not good on everything. And as a startup, for example, and as a smaller business, and even coming into the market at a higher level, you have to have focus on the different strands of strength as a team that are required for that business to be successful.
Yeah. And that some of the things that both of you have said is actually, again, it's ringing bells for what the D-list is doing, especially when you said with the ice cream guy and the other one with the aeroplanes, because I think so much in the past with businesses and people who are just starting out, they feel like they should just stay in their own groups and people who they know are doing similar things, whereas it's not always the case, and to have the vast variety of different people can also complement you, like you said, if you're not good at sales or you're not good at the operational side, to have those different people or I guess skills there that are readily available and just feel confident and trust in other people to actually help you and to communicate and to network. It's very, very valuable. So just some final words now. Karl, I'd love to know what we can expect from, I guess, yourself and Lloyds in the future and what we could look out for.
Hopefully some very exciting activity. Some of the things that we talked about today,
Yes.
and even the conversation about the D list, from this event, these past 2 days, and there's got to be an action of activities, following that. And I look forward to working with Natalie, Claudine, our chair, Carlia, our delivery person nationally, to see how we shape a program. And I like the stuff that we're doing in West Yorkshire, because one of the things I am quite immature about is I like to set good practice. I don't always want to look at other areas. I don't want to wait for London to give us good practice. I think we as a community in West Yorkshire can also offer good practice for others in terms of how we work together. So I'm looking forward to this year of developing some really, exciting partnership projects, and how one of the things that does make Lloyds stand out is it's not precious. We had a meeting a couple of days ago looking at, Natalie convened a meeting with a wide range of lending organisations, and saying, well, why don't we just work together better? Why don't we bring some synergy, coherence, make it, simple for the people out there that want to borrow money and want our support. And it doesn't matter if, someone comes to me as Lloyds and I can't do something, I'm happy to refer them to you. And it's that mindset.
Yeah.
It's a different mindset, to some people thinking that, everything's a competition.
There's no point in people wasting their time, going to an institution that's not right for them.
Yes.
And I think that's why it's important to understand the difference between debt and equity as well, and where you go kind of at the right point. And that's really difficult. We're not going to explain it, in the 5 minutes on this podcast. But I think, Karl's point around we need to get better as an organisation in terms of not just saying, sorry, but no, Lloyds can't do that at this moment in time because of X, Y, Z, and making people understand why. And it might be because, this product isn't right for you, or your business can't afford to pay this product back. So we'd be creating a problem, another statistic, by lending that money. But we know someone that can. So actually, you could borrow this over 5 years from a different organisation like Business Enterprise Fund, versus, the product that Lloyds would be able to offer you, which would be 12 months, which wouldn't be right for your business. So we need to get better at signposting things like that, and vice versa. So if a business goes to Business Enterprise Fund looking to buy a property and they've got, a decent deposit, that shouldn't be something they're doing, charging a higher interest rate for, and they don't. So they'll say, do you know what, a bank will do this and they'll charge you less for it. So go and speak to Natalie at Lloyds and they'll do this for you. It's about the business owner finding the right product for them in the easiest possible way, regardless of who they find. They still go to the right place. So that's kind of the utopia of where we're hoping to end up, into making it as easy as possible.
And it's not only about what the likes of Lloyds do, it's also about what our communities do. And what excites me about what we'll be doing this year is something around on the educational piece. So we, Palm Coast Society, the organisation I work within and for, we're looking to bring a coherence as well in terms of some of the key stakeholders around Black business support, Black business engagement, bringing interactions with more interactions on that wider space. The deal list, utilizing those opportunities, utilizing the Lloyd's products, working with the combined authority and others, and making sure that the community out there at large know more about those things.
Of course.
And know more about how to access those things.
Yeah, exactly. Yeah, so things to look forward to. We'll be doing a bit more around access to finance because that's what we look at. We look at, accounts and applications and stuff all day. So there'll be something to come around helping businesses, prepare for finance and what kind of finance is right for them at the right time. And then the second thing is Black Business Advisory Committee coming up to Leeds on the 5th of November. So there'll be an event to come off the back of that, which we will advertise in due course when we get there. We're not quite there yet, but I'm sure Mel will make it available to the D list as well.
Amazing. Well, I look forward to seeing these things in motion. I hope you enjoy the rest of Climb 24 and thank you for being on the podcast.
Thanks for having us.
Thank you.